Hello and welcome to Livewire's Buy, Hold, Sell. My name is Vishal Teckchandani, and my friends, today we are heading into the kennel to discuss the dogs of the ASX. These are the flea-ridden mutts that no investor wants. Their share prices are a complete disaster. But with the right conditions and perhaps the right management teams, even the scruffiest pup can become a showpiece. So to help sniff out which of this year's dogs might turn into darlings, I'm joined by Hugh Dive from Atlas Funds Management and Jun Bei from 10Cap. Welcome to both of you.
Thank you.
Thank you.
Jun Bei, I'll start off with you. Treasury Wine Estates, down nearly 50% this year. What's going on? Buy, hold, sell.
Actually, you know what? I'm going to put on the buy. Look, it's been very tough. The structural decline in the alcohol consumption as well as the wine from the young people is so low. And there in the US, we're just seeing it going negative more and more. And the company recently just had the write down. Things are going really, really tough. However, there's one bright spot. We're seeing the green shoot that's there in China. Now in China, remember it was going to be the big turnaround and everything else, and it did. There was a lot of pull forward purchase and everything else. However, China has some policy. You can't drink wine at lunchtime and the like, but now that's being eased. So we are seeing a positive sign coming through on that front. Maybe that, with very low expectation, that will be enough to pull the companies across. I think next 12 months, it will actually do okay.
Wow. So Hugh, is a turnaround in Chinese culture in terms of drinking wine at lunch sufficient to turn the stock around?
No, it doesn't. I think I like drinking wine, but winemaking is a tough business. Whilst I agree Penfolds is a great brand and they've done very well selling wine to China, particularly the high-end stuff, the rest of the portfolio is rather grim. They've spent $2 billion investing in Californian wines since 2021. Most of that's written off. All the goodwill's been written off. We've seen massive decline in wine consumption. Their Californian distributor was sort of left the market. Ultimately, people are drinking a lot less wine, a lot less of some of their bulk brands. So when you think about Treasury Wine, it's not the best thing is I think it's all Grange and sort of Penfolds and Grange. There's a lot of other stuff in there. The company's got about $2 billion of debt. They've got inventories of $2.5 billion. And what we've seen historically, a lot of those inventories can be pretty sketchy. They've dumped there's a lot of low-end wine in there. Whilst I'd like to see sort of a comeback, Penfolds come back in China, I don't think it goes back to what it was before, where they were selling wine at a massive, sort of almost double the margin into China that was being sold elsewhere in the world. There's more competition in China. I mean, they've got the red bottles. I might bow to June, but I'm thinking it's a very tough business to be in.
Okay, keep the wine in the cellar then. Hugh, staying with you. James Hardie, down nearly 40% this year, mounting legal woes, investors losing faith in management, but the chairman did drop a casual $800,000 on the company's stock, buy, hold, sell.
Hardie's of one of the only building material companies that actually got some proper IP. Their fibre cement, they have some proper intellectual property in it, and they can actually generate a premium for that. Other building material companies, making bricks or tiles, the IP hasn't changed since the times of Julius Caesar. However, that Aztec acquisition is not a good one. And just the way how the corporate governance, how they treated shareholders didn't get to vote on it and just rammed through. Adding another 35% of shares, it's just too tough. And then we've seen the chairman and two directors get axed at the most recent board meeting, replaced by two ASX executives. Just the level of sort of corporate arrogance towards Australian shareholders is too much. I would like to see them a bit of a rebound, but just the dilution, the quality, buying Aztec, it dilutes the high quality of the underlying earnings from fibre cement sell.
Okay. Jun Bei, I'm betting you have a different answer, buy, hold, sell.
Oh, I wonder how you know. Look, I got a buy on it. Hugh's absolutely right. They bought that ASX business at the top of the market. You just market before market started slowing down with big price tag and forcing Australian investor really into it. Without consulting too much and just say we got to go. And then they front loaded a lot of their book and all the things they've done which is horrible and the like. But company is now trading on very low multiple. ASX is, in my view, is actually a good business. If you look at the US analyst that has been covering that company, everyone loved that business. It's just really expensive. They bought it. They pay way too much money for it. And so the board changes recently is look at it. Investors voted out, or the Hardie's board member. They kept the ASX board member there, which in a way is a vote of confidence, saying we actually think ASX is a good business. Now that we washed through a lot of the things that they've done, we think they can finally rebase the business and grow from here. Even though the market condition is tough because no one has any high expectations anyway. So so we are now already seeing the green shoot more recently. So more recent update, they had an upgrade and then they started upgrade. There are already 2 upgrade that has come through. So we think that they have rebased earnings. Things will look okay, and it's not expensive. U.S. rate cut is still on the way. There's 50 basis point expected next year. We have zero company that give you that exposure to the U.S. market in consumer, in housing, in cyclical. So, well, aside from BlueScope is also good, but this is a pure play. So, in my view, this is a buy.
Okay, Jun Bei, staying with you, Goodman Group, not the worst looking dog. It's down 16% this year. Buy, hold, sell.
Look, I will put on a hold. I wouldn't call Goodman Group is a dog. It's one of the most highest quality of the market. It just did really, really well in 2024. Everyone became so excited about its data center opportunity, which they didn't know existed because it was an industrial business. And the company, the management team, has delivered year in, year out in that industrial property portfolio. Now what they have found is like, you know what, we got all these industrial property. Why don't we convert it to data centers? And they got the client, they got the capital, they got the site, they got access to energy. Why don't we do that? So in a way, it's actually a cheap way to play into some of those data center. And that's part of the reason why it's been sold off a little bit, because people are a bit questioning about data center. But this is a really strong management team, know how to generate return on put capital, on the dollar that they invest in the business. For me, it's a great business. I'll stay with it. Do I buy more? I probably wait till it become a bit cheaper if it does happen. But it's something I always have in my portfolio.
Okay. Hugh, same question to you. And since it's $4 billion capital raising early this year, it just seems to have lost momentum. Buy, hold, sell.
I mean, I conclude with Jun Bei. It's a very high quality company, but I think there's still a lot of hot air with that AI and data centers in Goodman. Trading on 24, 25 times, has come down from 30 times. I don't own it. I wouldn't own it right now, but if it got a little bit cheaper, I'd buy it. The quality of their industrial properties and their industrial the project generation is very high. Still a bit too expensive for me. I would like to have a bit of the heat come out of that data centers. Also looking at the pipeline, it's $100 billion worth of data center pipeline. How does that get funded? They've done quite well in getting capital in the past, but that's an awful lot of money, and some of the heat's come out of it. But similar, as Jun Bei said, had a great, it's sort of point in time, a timing mechanism, and we've seen a bit of rotation from Goodman into Charter Hall.
So now we turn to the one beaten stock that you think could make the ultimate turnaround for 2026. Hugh, what is the dog breed that you want to go for here?
Well, the dog breed I'd like to go is not a very exciting company, Amcor. So there's not a lot of AI in medical, food and beverage packaging. They made an acquisition last year for Berry, which the market didn't quite like. They didn't quite believe the synergies. What we've been seeing since then is some of the synergies are starting to come through. It's very cheap. It's trading on 10 times earnings with a 6% yield paid quarterly. And we saw sort of in October came through, they upgraded guidance, going to generate close to 12 to 17% earnings. It's looking, their 2026 is looking a lot brighter. All they have to deal with a lot of their synergies. When that comes through, we'll see a bit of rebound in the stock, and it's not very well liked, but we like it.
Okay, so Jun Bei, we're in the kennel. Which dog are you taking out as the best turnaround play for 2026?
Oh gosh, there are so many of them. Look, I'm going to put my money on WiseTech. I know this is a tough one. It's controversial. I know there's lots of issues to go with it. The company's down over 40% for 2025. Look, it was expensive, but the business itself is tracking along fine. Now, it is going through its new commercial model, which actually at its latest investor day, now they already rolled most of their clients onto it. And the immediate uplift is quite meaningful. It's not in anyone's forecast. Now, we're not banking on that. With the share price fall, there's very limited expectations at this stage for the next 12 months in terms of growth. And even if we just assume a little bit of those customers coming through with those price increases, that's actually quite meaningful. So for me, I'm going to put that dog for the top of the list. I think it will do well. Look, it's not for the faint-hearted. It might be speculative, but for me, it is actually a really great business. Aside from you clearly have other issues that might impact the share price.
Okay, well there you have it. Some of the ASX scruffiest pups may just have some potential yet. Hugh, Jun Bei, thank you so much for your time.
Thank you.
I hope you enjoyed that episode. Please don't forget to like this video and subscribe to our channel. My name is Vishal Teckchandani. Have a great day and choose your dogs wisely.